credit unions by nature have been lean operations. And you've got only that much staff that is allocated to technology. So you typically go out, you look for a service provider that gives you the platform, gives you the ability to maintain that platform, and then you're on your own. Um, in recent times, though, that playing field has become a lot more competitive, and thanks to partners like Mambu, what credit unions can really do is unlock themselves from that lean operation mindset and look at what they could do in the new modern world of digital engagement. So we were looking at what keeps or holds credit unions back, and what was good, nice, new, shiny about 15 years back is now old and does not really allow work to happen. So the first thing that we look at doing is, how do you unbundle? How do you figure out your dependencies on critical pieces of technology infrastructure? And what do you do to remediate from that situation? When you do that remediation, one part of it is treated as an expense. It's something that you have to take out of your bottom line and you need to spend on it. And therefore, we need to look for a corresponding lever of how would you really look at revenue coming into the same bucket so that you can offset that expense. And that's where we help clients build business cases that say that if you look at replacing your core banking platform, if you look at replacing your digital channel platform, you're going to be able to onboard X many number of loans. You'll be able to attract these many number of customers who can provide deposits to you. You will then be able to put together all of your metrics around what your loan to deposit conversion looks like. How many loans are you buying? How many loans are you selling, from that collaboration with other credit unions? And they come up with a number that then tells them that in the next 5 years, they would be able to go from, let's say, 250,000 members to maybe 500,000 members. Now, that is where tangible change starts happening. That's where they start realizing that today I can only do this much, but if I put these foundational elements in place, I'm going to be able to scale. So we have a very interesting case in point. We work with a credit union services organization out of Canada today. And Mambu and Persistent have partnered to service these folks and help them on their journey of digital transformation. What's happening with this is that not only would they move several generations ahead of conventional financial institutions, and I'm talking some of the largest banks in Canada, but they would also be on very level playing ground to service a completely new breed of customers. They can service fintechs, they can service other credit unions that they could earlier not address. They can even service other financial institutions at this point in time just because of the need that they've generated for themselves. And in that whole process, they've created value for their credit unions and the members. And this is all about how many financial products you had before and how many financial products you can roll out now. What can you do with differential pricing? What can you do with seamless onboarding? What can you do with the financial advice as well as education to help people understand which financial products could make their lives better? So this is a multi-year journey that we are on, but what we've seen with the recent results, just from the first few credit unions who started adopting this, there is immense euphoria in the ecosystem. There's a breath of fresh air. There's new operational efficiency that has come in that allows those same tellers to talk with a lot more enthusiasm with their customers. So technology does bring a smile to the face in this particular example.
Yeah, I think you're absolutely right. And I want to jump in and say, when you think of the credit union space, we also think of it from the standpoint of it's kind of a closed industry. Well, a lot of the systems that were developed through credit union service organizations. And so it was like a trust. We invest in the R&D. Most, if you will, organizations don't. I mean, in the credit union space, there's not a lot of money put aside for R&D. There's a technology expense, right? And so what we're seeing from that is, we talked about it earlier, we've got antiquated cores. We have systems that now the tech stack has been built in such a way that it's very difficult to unwind. I hear my clients say, "I'm going to retire before I, take on a conversion," and we're converting to solutions that are not, if you will, better. They're just different, and we're still restricted, if you will, by those antiquated links and just bogged down. So what you were referring to, we were very excited when we got to know the Mambu people as well, and took a look at what if we simplified the core. What if we created a credit union shared services model in the US? Everybody talks about it, but that was then, this is now, right? How could we create the same kind of energy that you're referring to? We have to remember too, a point here is that the Canadian credit unions and the Australian credit unions both lost their tax exemption. All right. They became, if you will, like a bank. Now we're going to be able to see that differentiation. And I think some of the smiling that you're doing and what you feel, it's going to come from that sharing again, that cooperative spirit again, that says we can go out and we can compete with the pillars that credit unions believe in. So when I look at the technology stacks, the key thing for all of our listeners is we're building trust outside the ecosystem that was somewhat closed to partners that specialize. When you end up with a tech stack around core, you end up with all of the integrated pieces that are there. So somebody can say we moved to the cloud, cool, but it's not native language, it's not using APIs, it's not allowing you the flexibility in your journey. So working with Mambu and working with some of our other AWS partners and looking around and saying, what are the core things we need? How can we simplify it? And then how can we change some attitudes? Move away from fear, start to look at survival of the small credit unions will come from shared services. And I say that on two levels. One, that we call them boutique credit unions. They need to join together and have that scale so that they can everybody has to make money to make it sustainable. So we have to have scale. And the two is cybersecurity. And when you think of the small credit unions, we still represent over 75 billion in assets. Okay, and so everybody goes, oh, it's small, it's one-on-one credit union. No, it could be big if there was some kind of cyber incident. So the fear that we have about change needs to now become fear of not changing. And I think that's a mental shift that when we started this conversation a year ago to where we are today, too many things have happened that people are realizing. And one last example, we have a credit union that's around 100 million, merged with a credit union around 32 million. So, they don't have the scale. But when they did the acquisition merger, it cost them 1.2 million to get out of their core contract. Wiped out the net worth. So we also have players in our industry that I'm not afraid to call out. We're in a situation right now where our credit union homegrown solutions have not been able to keep up, and we've closed off our partners that could come in and specialize. And I think Mambu is going to not only be one of those, but their culture and Fernando's culture, the CEO, is something that we believe will make a difference.
Spot on, because I think one of the examples that comes to mind is just around a UK-based concept where they were looking at servicing what is called the subprime market, and there was no subprime lending at that point in time. Standing up a whole technology stack and getting it through regulators is extremely difficult. But once you've done that, what this operation proved out was that they could really build scale really, really quickly. And as of last year, they were one of the largest subprime lending books in all of UK. So this is a ground up build where people chose the technology, they chose the customer segments, they made sure that they knew what they were doing with the financial product, and the technology made it happen. So your point about the fear of not changing is actually very relevant because it was always a threat that forced people to change, but now it's opportunity. So there's a big difference in mindset.
I agree.
Oh, awesome. Thanks. I think like both the, Karan from Persistent and like Sue from MSA, they represent, some of our most important initiatives in this market with credit unions, with league data, Persistent and Mambu working together to sort of like build out this model that is not being seen in the market. And, Mambu sitting in the center as a lever for like, building this operational excellence and being able to scale and future-proof businesses and kind of like get out of just the credit union box and explore new technologies, new products, and the world is the oyster kind of a mentality. And then with MSA, we're working and Sue and team, we're working on this initiative, which is the credit union shared services model, where we figuring out how we can build a model in the US where boutique credit unions could help from the efficiency that cloud brings in, and Mambu sitting at the center. How does it create like a model which could be efficient and serve and make sure that these credit unions are competitive in the market, and launching differentiated offerings, but also supporting member experience and the ethos of credit unions. I'll just take an opportunity to probably dive deeper into, some of the guiding principles of what makes Mambu, the lever of operational excellence, and, how it's supporting this model. So maybe, just going back to the basics of cloud and Mambu being a cloud native solution, and bring into context, this operational efficiency a bit. Cloud is based on the principle of usage versus, having a fixed fee, so fixed license fee for its customers. So essentially it encourages businesses to, be cost optimized, because as the business scales, their costs scale, and it's not a, one size cost model for everyone. So it keeps, you honest, your budget predictability, your how much you're spending on these resources versus not having that visibility on being stuck with a model that does not work for you, both in terms of, just the cost and also the resources that you're using from this infrastructure. The second thing I want to highlight is, the low code and configurability of the solution that allows for organizations that do not have large, big coding teams or development teams to be able to launch something fairly quickly, and leveraging the organization that they have to the best of extent, and be able to like test, learn, and make adjustments to the market. So I think that also, kind of helps you maximize the resources that you have and be able to produce something new and something tangible, which you can, showcase and like learn and kind of adjust. The third, and I think this is more of, how we bring our offering together. We're working with our ecosystem partners and making sure we're launching or we're helping our customers launch best of breed solutions, is the composable and modular architecture, which is driven through APIs. And of course, like, both Persistent and MSA is aware of how we deliver this kind of offering to the market. But essentially what it allows our customers, or just generally the market, to do, or like an organization to do, is firstly focus on best of breed solution instead of going for an end-to-end ecosystem, end-to-end offering. It avoids vendor lock-in. You're able to plug and play and not be in a place where you're not flexible enough to change your organization as it adapts to the future, or looks to adapt to new technologies, new trends, or essentially new business models that are coming up. So it gives you that flexibility to adapt, change your offering completely in case things do not work out the way you think. Because I think the idea is to like be ready for change and have an architecture that allows you to do that and compose your own destiny, as we call it.
I think you made an important point, Sue, about the merger example that you gave, and the $1.2 million wiping out a lot of the value in it. That vendor lock-in is very real. And when you look at solutions today, the whole concept of ecosystem is really big, which is why when Anshul uses words like composable, what that really means is that you can take pen to paper and you can actually draw out the lines of where a particular party plays and where they do not play. And the mode of consumption has changed. In the past, we used to talk about licensing, and we've been in the technology business for about 35 years now. So traditional technology licensing does not actually work anymore. Everything is software as a service, and everything is on a tap. So what's the basic principle of a tap? You turn it on and you turn it off. So the ability to replace, the ability to get best of breed, the ability to get competitive differentiation through your partners is probably the best at this point in time.
Yes, I think we're basically, I mean, the question we're trying to answer here is like, how is the transition from a legacy technology to a digital first, I mean, thanks for your points, Sue. I think I totally agree with you. I think it has been a journey so far, a year back where we were and now where we are. And I think same with, Karan and Persistent with our journey with league data. It has been quite a transformation process. And I think lots to learn from both the things. And I guess like in terms of if I had to put like the principles down from, what might be the approach. And I guess it's coming in from the learnings we've had in the last couple of years is essentially for credit union, I think it's about like defining a vision and then committing to it as well. I think, and that's the part which of course takes a lot of time, which comes with awareness, which comes with understanding this technology, which understands with also understanding where they are right now and acknowledging that could be, blocking their growth in some ways. It could be, of course there are benefits of that as well, but like what is that they want to achieve, right? Is it, are they looking for new member acquisition? Are they, trying to make sure that members are retained? Are they looking to launch something new and ensure that, their members are getting the latest, products or services? Or is it just to, for a bigger credit union, maybe it is to just reduce costs, right? So essentially like having that definition of what they're looking to achieve with this transition and making a commitment to it, I think, because once you make a commitment, there will be a lot of things that you need to like commit within the organization as well. And I'll touch upon those as well, right? So I think it's about defining and committing to that vision. Of course, it takes time, but I think once you do that, you're on a journey which will definitely take you to achieving something great, something that is more customer and in this case member centric. The second step would be like to just audit, what is the current portfolio of solution and systems that you're operating under? Like what is the infrastructure look like? What are the processes? What is, how many people are involved in those processes? So you have an understanding of what is the scale of transformation you're looking at. And then what is the approach to migration? Sometimes there's a trap where organizations want to do a big bang where they want to like change everything at once. We typically recommend incrementally modernizing your core, which gives you a chance to adapt to the change. It gives you a chance to like, test something out first without putting at risk your existing operations, and then slowly, converting or making this migration in steps. So, which I think is setting yourself up to success. Of course, there are pros and cons for each, but I think typically for a larger credit union or a QSO, this kind of like would be helpful in their approach. So I think that's the second principle, like assess what is the existing set of solutions, the infrastructure that you're working with, and come up with a plan of how you'd want to transition out of it. Of course, third is, helping make a business case can help you articulate the value and can articulate the vision and goals to your members, to your investors. So I think building something like that is definitely instrumental in achieving that transition. And I think the fourth one, which I would say is like, I think something that we've talked about a little bit, and Sue also touched about, is like the human change, right? Because as this change happens, as this transition happens, there's going to be a change in the organization and change in the culture of the organization. So a lot of times, the organization could fall behind in this journey, but essentially, I think we have to keep them on the same page and move along together. This could include like, updating them on the new technologies, helping build new processes, a lot of training for the staff. So I think that needs to happen as you move through the change. And that's something that may be understated sometimes, but is quite important. And I think the last one in the which I think like it's getting ready for the transformation, right? Like testing your assumptions, your processes, to just like make sure that you understand the quantum of change that's happening and ensure there's readiness at every stage of the change. And I know like this current someone who's actually like helped league data go through this change. I'll pass it on to him just to like share some of his experience around how you could move to from a legacy technology to a digital first cloud native.
Yeah, I think we've learned the art of moving from scars on the back to not getting them. So I think for any program to succeed, the maximum time goes in planning for it. So we typically follow the same methodology of assessing where you are so that you have a point of departure and then figuring out what your point of arrival is going to be. And in between that, it's going to cost dollars. So how do you really figure out where are you putting your dollars to the best use? So there is a total cost of ownership, there is a return on investment, and that's the finances of it that every organization looks at very, very closely. So from our perspective, when we look at a particular program of work, generating that trust, evangelizing that trust, getting the right champions on board, and getting the right tribal knowledge from within that institution, these are the key underpinnings of running a good program. We found people who were so knowledgeable that they could actually run this banking system without a system at all. They were doing it on pen and paper whenever the systems were down. And that's something that League Data has as history within the organization. So we were able to tap into that very rich history. When we were helping them figure out what their overall delivery timelines could be, because everyone wants to know when is it going to be done. When they ask when it's going to be done, they also want to be able to tell their end clients what all are they going to see as change. So the pieces that Anshul spoke about with change management, with overall program management, governance that you spoke about, Sue, the tribal knowledge that we've tapped together, these are what we really need to identify. And once you've identified this, it's smooth sailing. There's literally no challenge at all. Well, that's what everyone would tell you. But you are going to face an insurmountable amount of challenge in each of these areas. So as long as you're mentally prepared for it and you have a good partner by your side, you're going to make it to the top.
Well, I think that sums it up. I think that we have to all believe in credit unions. We have to let our family touch our shoulder and say they're glad to be home. And I really think that we have the right end in mind for doing the right thing. And when you have that, that's what we need. And credit unions believe so much in that. So thank you to both of you. I think the shared services model is dependent upon what you're also doing with League Data, because everybody wants to see what's happening. And they were in Canada and spoke in front of our credit unions, and it was pretty exciting. So thank you for that.